Hey everyone, Michael here. Welcome to my YouTube channel, and in today's video I want to talk about a concept called confluence stacking in trading. This is a very important concept that has been a game changer for me and also increased my win rate significantly. As you can see, in August we ended the month with 90% win rate, and this month, September, we're at 91%. So it's going pretty well, and we had a 9 win streak as well this month. And that's all to do with being patient and waiting for the right trade to come to us and having the confluence to give us the confidence to taking our trade. Because every trade that you take, there's a risk. And when you have more confluences on your side, more probabilities on your side, there's just higher probability that you'll win the trade. So going into my charts over here, you can see this example that I actually posted in my Discord group. Just to break this down to show you what we saw is on the 4-hour time frame, we can see that there's a supply order block and the price tapped into our 4-hour order block. And if we go down to a lower time frame, 1 hour, 15 minute, we can actually look at this more clearer. And when we drew our fib over here, we can see that it's in our golden zone over here, 618. And we also have this fair value gap over here. So that is a lot of confluence to tell us this rejection most likely will see the price head downwards. So knowing that, and also knowing that it's in our premium zone, and that's a good opportunity to sell. And by looking at how it rejected, we took this trade down, and you can see by playing this replay forward, you can see that the price did go down and we actually trailed our stop as well. So this was a really nice trade that we called out, and that worked really well because we had all these confluences in place to tell us this was a good trade to take. So that is one of our trades. You can see if we play this out, there was another trade that we called here. So the price tapped into this area over here. There's a demand zone right here, and the price rejected off this area and went up. And then if we head down to the lower time frame, 5 minute, we can see that it actually created a fair value gap, right? So when we play this forward, you can see the price came into our fair value gap, rejected this area, and then went back up. And this is one of the trade that we called out, and that played out pretty well. So it didn't hit our full TP, but what we did is we did put our stops to break even when it was 10 pips in profit, and we actually got a nice 20 pips, I believe, before we closed it out. And then it did come back to our break even point. So we got tapped out, but we still secured profit over here. So when you have multiple confluences, it gives you more confidence and more opportunity to jump in. And for the first trade that we talked about, this was actually a market structure that was bearish. So it was actually a good time to sell as well because we're going with the trend. And this one is more against the trend, so it's more like a sniper entry to get in and get out, get our pips. And the market moves in waves, right? You can buy, you can sell at different time, but you just have to know what you're doing, because if you're going with the trend, there's more likely that you can have a bigger move. But if you go against the trend, that may be just 20, 30 pips, but that's still good, right? If you understand what you're doing. Of course, it's more risky if you go against the trend. So those are just some examples of how you can stack confluences together, have a game plan going in, and then there are higher chances for you to win the trade. So just to bring your eyes to another example, we can see here on Friday, we actually talked about this trade over here, a potential sell trade. Basically saying that looking for gold to take out the highs to target the liquidity at the bottom, and because there's red folder, we got to be careful, right? So going over here, you can see I gave this prediction, and then if we actually go back to what happened on Friday, you can see there's a massive drop off, and that's exactly what happened. We had liquidity over here, so the price went up, took out the liquidity, but at first it did come up, went down. It didn't have enough liquidity to drive down, but I still wanted the price to come down to take out the liquidity down here. So what happens is the price went back up, took more liquidity, right? You see this rejection, that's where we got in, and then a massive sell off over here, and then we can see that the liquidity down here got taken out. So that was one of the trade that we talked on Friday, and there was actually some guys who got in late and still managed to pick up 80 pips, and that was a nice 120 pips run over here. So understanding technicals, understanding fundamentals, and when you can stack all those confluence together, it will give you a higher win rate, more confidence in your trade, and you just have to wait for the trade to come to you. Change your mindset. You don't have to take many trades a day. 1 trade, 2 trades a day is all you need, and you just have to follow your game plan. There's no 100% strategy, but you just have to document, journal your trades, understand what's going on. But one losing trade doesn't mean that there's a hole in your game plan, right? Price has no emotion. It can do anything it wants, and news can really mess up your trade as well. So you just have to really be careful when you're taking your trade, but don't get too emotional over it. Win or lose, it doesn't define you. You just got to move on and just look for your next trade, and then look for your confluences before you jump in. And this way you can have higher probabilities and more confidence even to hold your trade as well, knowing that you're following the trend, all the confluences on your side. You can hold the trade for longer. Remember your risk management. That's how you win the game of trading. All right, so I hope you enjoyed this video, and I'll see you on the next one. Take care.